Good morning, everybody, and welcome to this weekly analysis session for Monday, the 17th of August 2015. Well, volatile week on Australian markets last week, a little bit up and down in the US. Let's dive into things and see what's happened to our portfolio, see if there's any new trade setups, and investigate how the broader markets are behaving, what it means for our value at risk and management of our portfolios. First and foremost, just a quick reminder, those of you who happen to have a space in your diary that has magically appeared and would like to come along to the Elite Traders Academy, certainly you're more than welcome. We have got a couple of spots still available, remembering from the 28th of August through to the 2nd of September up at Sanctuary Cove. And as said before on many occasions, a really good venue, but more importantly than that, some really great content this year with some excellent outside speakers as well. All right, our disclaimer: the content of this presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, your financial situation, nor particular needs. So please, before making an investing decision based on the general advice presented in any of our presentations, please consider whether that is appropriate in light of your financial circumstances. All right, the agenda for today, we'll go through and have a look at the portfolio management for the time being, see what's changed. Certainly there has been a change in market risk in both markets, both the Australian market and the US market. In fact, the Aussie market has moved to levels of risk. Such was the price action of last week. We'll go through and have a look at some specific setups. In Australia, I could only find one this week, and I could only find 5 in the US. So certainly if you've managed to find any others that I didn't, please be forthcoming and let's have a look at them. Certainly I'm not the only one who can find trades, and I trust you all that you're all understanding of the specific requirements in terms of our price action filter, relative strength, trend alignment, obviously a number of characteristics that we're looking for. All right, as mentioned, in the Australian market, we are now in extreme risk. Last week we were just in high risk, teetering on the edge of very high risk. And last week, with the plummeting in the markets, then we had a move straight down into extreme risk, which means that we're only allowed to apply a 10% market risk multiplier. So again, if you're having trouble with that particular concept, you know what to do. Get in touch with us and we will explain that very slowly and very carefully so that you do understand that. In the US, we've dipped below what was moderate market risk, and we are now in high risk market mode there. So as such, we need to apply a 40% market risk multiplier to our value at risk in that particular market. As you'll see there, the Aussie market in extreme. Now, assuming that you're splitting your portfolio 50-50 between the Australian market and the US market, that means that you would traditionally be allowed to allocate 15% total value at risk. Splitting that in two, that means you could have 7.5 allocated to the Australian market. Because we are in extreme risk, you need to apply a 10% market risk multiplier to that 7.5%. And that leaves you with a very small value at risk of 0.75% of your total portfolio allocated to the Aussie market. Over in the US, as mentioned, we're now down in high risk territory. The other 7.5% that you may be allocating of your portfolio to the US, you apply a 40% market risk multiplier to that, and that means that you are allowed a 3% total value at risk on your entire portfolio allocated to the US. Those of you who are still choosing to scale out, we are at the moment in the Australian market. That should be extreme. It shouldn't be very high risk. I've just got that round the wrong way. So that should be extreme risk there and one-to-one type of targets. And that high risk, that's correct in the US there. And again, if you're choosing to scale out, that should be at 1-to-1 as well. Certainly, I hope the message has become fairly loud and fairly clear. In terms of your portfolio management, it's really important to make sure that you are not strangling your trades, because whilst the broader markets may be increasing in their level of risk, certainly the benefit of managing your trades well should be paying off. And I know that in the Australian watch list and even in the US, it astounds me that every week there are still stocks that are being trailed higher and higher with their protective stops. And that's what it's all about, letting your profits run and just being mindful of your initial risk on those trades. All right, so let's go through now and have a look at the markets. In particular, let's go and have a look at the market risk to start with. So the XJO, you'll see from last week, just before we dipped into very high market risk, or even extreme, we were just sitting in high market risk, and then on Monday we actually went into very high market risk, and then on Friday we dipped down into extreme. So if it wasn't enough for the previous week when we had ANZ being the first bank to raise more capital for their reserves, etc., as suggested by APRA, and the other banks going to do the same, was a bit of a shock to our markets. And then just last week we had China devaluing its currency and sending a bit of a shockwave through the markets as well, and particularly a commodity-based market such as ours. So there we are now at the moment, down in extreme risk, and you'll note now that for the year we're down nearly 1.5% from the beginning. So hopefully your portfolios have managed to stay afloat and certainly be outperforming that broader benchmark. And again, it's only going to do that if you allow yourself to manage your trades in the appropriate way. Now, if that's something that you're finding difficult, then give us a call and we'll try and talk you through some ways that you might be able to do that and make that be a little bit more make that come a little bit more natural to you. It's sort of something that you do need to learn, and in many ways it's a little bit counterintuitive that we almost need to be risk-seeking when the market is moving in the opposite direction. So, continuing to stick to your guns. Hopefully you've got trades that have moved enough earlier on in their progression that you've got plenty of space, 3 ATRs away from the points at which you would need to be exiting your trades, and that those trades, through their relative strength, are hopefully holding up well for you. That's the XJO. So let's just duck across and have a look at the S&P 500. Again, we've had another market risk change, and we are still predominantly going sideways. We had a nice pin bar there on the Wednesday. Friday, white candle closing towards near its highs, which is a positive sign at the very least. But again, another market risk change and a broad sideways moving pattern at this point in time. What's going to happen this week? Well, who would know? Don't have a crystal ball, so we just need to manage those trades accordingly. And let's see if we can find any new trades into the ASX. The only one that I could find this particular week was ENE. It did last week, after having a small retracement, put in if I just zoom in there a little bit, you can probably see we've got a short-term uptrend which has just been confirmed now, so therefore we have a high trough that's just been formed. The price action on this one is not particularly strong. I don't feel all that confident in terms of the directional strength of that short-term uptrend at this point in time. However, it does tick the boxes in terms of price action. Certainly in relative strength terms, it's been very, very strong. And again, you need to put this against the backdrop of what our market has been doing of recent times as well, and that bodes well in terms of setup for it, other than the shallowness of this short-term uptrend at the moment. In terms of where have we been, let's just zoom out. Certainly, we don't really have anything to think about until this sort of previous major point of supply way back in 2001, which is an eternity ago, so I'm going to ignore that for the time being, and let's just zoom back into where we were so we can see the structure of the trade setup. Certainly the trough that has formed is well clear of the second from last peak, So we just need to wait for the breakout of said last medium-term peak. And as such, we need to place an on-stop order at $8 on the knocker. That medium-term peak is at $7.98. 2 pips above that is $8. With a limit 1% above that, we'll have the limit at $8.08. A protective stop coming in at $7.41, well below that last medium-term trough and outside of 2 ATRs. That was the only one I could find in the Australian market. So I'll hand it over to our audience to see if you've managed to find anything in the Australian market for the time being. And then we'll go over to the US and see if we can find anything over there. All right. Any suggestions? There were a couple of, despite last week's price action in the Australian market, there were actually 2 trades that we trailed stops on. And one of those is CZZ, and I mentioned last week whether anyone was in CZZ, Capilano Honey. I know a few of you had been in it. Some of you might still be in it. Some of you probably wish you were still in it. So what I might do there, just before we head over to the US, is just bring up CZZ, Capilano Honey. And there it is. Again, last week's price action, just massive. And it being so strong, really dragging up that 3 ATR now up to $16.74. So that's a huge trade in what has been a very, very difficult market. And again, it just gets back to the right sort of trade management. Now, at this point being so far up, is it okay to take some profit on this particular trade? The price volume volatility signal hasn't gone off. Certainly, I don't see any problems with putting a little bit of capital aside, considering how far it has moved, and then just waiting for it to structure up again before adding some more into it if you like. Nothing the matter with doing that. You've certainly made a lot of money on that particular trade. The other one that also had a trail stop this week was Blackmores. There it is there, so we'll just go and have a look at what's been happening with that one as well. Blackmores moving up quite nicely at this particular point in time. You can ignore that little annotation that I've put on there. In fact, I might delete that if I can. Oh, now that I've made it small, I might not be able to. Anyway, it doesn't matter. You'll see that last candle, we've now got a higher close, and because we've got a higher close, remembering this trailing 3 ATR works off the basis of the close, we've got a higher close, and that's just dragged that up a little bit more as well. So again, lots of white candles. When you compare this to the broader market, lots of relative strength, and these are the sorts of stocks that you're never going to know whether they are going to turn out like this. You just have to create the environment in which they can unfold, and the only way that you can do that is to give them a nice amount of room to move. So hopefully that makes sense. All right, let's go across to the US now and have a look at what sort of setups we've got over there. I think I only managed to find, I think it was five this week in the US. The first one here being Depot Med. Again, it's had a little bit of a rest through here, and as a result, its relative strength just pulling back a little bit. But then, obviously, probably to do with some earnings, etc. Bursting out of the blocks, holding up very well against the broader market. Little retracement last week would have been nicer. The only thing to make this a little bit better set up was last week's candle. Whilst we did have a higher high and a higher low, so therefore the short-term uptrend, it would have been nice for that to be a white candle as opposed to a black candle. Nevertheless, it does constitute a setup in terms of our price action. Our last trough there, well clear of our second from last peak, which is down here, and certainly this old previous fairly significant point of supply, it's well above that as well. Let's just zoom out and see where we are in the scheme of things. All-time highs. And again, thinking about all-time highs, what's our market, or what's the US market done? Is it at all-time highs? How far is it from it? Here's a stock that is at its all-time high. So ticking the boxes there, so we just need to wait for the breakout. And as such, we have an order on stop at $33.76 with a limit to $34.09. Our protective stop outside of 2 ATRs and at least 0.5% below that last medium-term trough. And that protective stop coming in at $28.95. That's Depot Med in the US. Next trade. Dicom Industries. Quite similar in terms of structure to the previous trade there. Let's just have a quick zoom out and see where we are. You'll see again that we're at all-time highs. Way above levels way back in 1998. I wonder how many of you were looking at the US markets in 1998. Seems like a long time ago. Time flies. I think the older you get, the faster the years go. I certainly start to think that, particularly with young children becoming adolescents and talking back to their father. Anyway, I digress. Dicom Industries. Price action there, last trough, certainly well clear of its second from last medium-term peak. We just need to wait for the breakthrough of that last medium-term peak there. As such, an on-stop order at $70.82 with a limit to $71.52 and a protective stop coming in at $61.93. So that's outside of 2 ATRs and 0.5% below that last medium-term trough. So the low there of that last medium-term trough is 62.25, 0.5% off that particular low, has our protective stop at 61.93. That's Dicom Industries. Again, nice relative strength through there as well. So very, very positive, and a reasonable number of white candles as well, which is always nice to see on a chart. Google, this is one from the previous week, which again has come up on the scan. You'll see that this last week's candle confirming the short-term uptrend, so it's exactly the same setup from the prior week. That's Google, so certainly one to keep an eye to see whether we break out above that $713.35 level, which is the on-stop order. The limit's still there to $720.48. Protective stop at least 2 ATRs away and at least 0.5% below our last medium-term trough. Brings that protective stop in at $648.29. Again, just to zoom out and make sure that we're doing everything right. And all-time highs for Google there. Moving out of this long period of sideways stagnation type of movement. Wasn't a lot of clues, a lot of indication that this was going to move out of that sideways movement, other than perhaps a succession over probably a few months that we had slightly higher troughs and then certainly some earnings, etc., shooting it up. Since then, having a retracement and looking to move further to the upward side. So Google, it's in the a stock that's in the NASDAQ 100, which is one of the ETFs for the month that we are invested in for the Elite Funds management system. All right, the other stocks that came up this week. PGR. Now, I think PGR was in the watch list from last week as well. So, in this particular example, we've got short-term uptrend confirmed. Last candle again confirming the continuation of that short-term uptrend, so it's moving in the right direction, which is good. Relative strength holding up very nicely. We've just got to break above that last medium-term peak there. So as such, from last week, still a valid signal. Coming up on the scans again, on stop at 31.44 with a limit to 31.75. Protective stop coming in at 29.76. Let's just zoom out for those of you who didn't catch last week's session, just to make sure that we're at all-time highs, and we are. So a nice looking setup on PGR. And not too sure whether we've come to the end of our list there. We might have one more. ULTA. ULTA has been one that I think on a previous occasion we had a setup where a number of weeks ago where we had a medium-term peak and the confirmation of a short-term uptrend, and as such, a number of weeks ago we had an on-stop order to enter just past, if you can see my cursor there, a couple of pips above the high of that candle. We didn't get there on that particular week, and subsequently started to form a short-term downtrend. So at that particular point in time, we had slightly higher peaks. It was a breakout above that particular level. We put in another trough, but it didn't pass the price action because the trough that was going to be formed could not, under any circumstances, because we had a short-term downtrend, the future trough that was going to be formed into the future could not be above the second from last peak, which is the one over here. And as a result, that got cancelled out of the watch list. Subsequent to that, it did in fact move up beyond the previous level and move up to around about the $171 level. It's just put in a short-term downtrend, and then last week, a nice candle given what the broader market did. Short-term uptrend now confirmed. As such, we've now formed a new medium-term trough. Where is that trough in relation to the second from last peak? There's our second from last peak over there. It's well clear of it. So exhibiting good price action. So it's ticking the box on our price action filter. And certainly looking at the goods at this point in time. So all we need to do at this point is break above that last medium-term peak. That last medium-term peak is at $171.21. So 2 pips above that is $171.23, with a limit 1% above that to $172.94, and a protective stop at $158.70. That's ULTA. The other one that was in there from last week that hasn't triggered yet was CAG, and I can see a couple of you have typed that one in. I'll have to go to my Securities Explorer because it's not part of this watch list. CAG, Conagra Foods, and that should come up with the analysis on it, which we've saved. And last week had to get to 45.51. And what did it get to? It got to 45.48. So very, very close. Not quite there yet. Looking at that last candle, it wouldn't surprise me if that triggers in probably tonight with a little bit of strength in the markets. All right, so that's the end of those ones there, Google and PGR. Yep, thanks for that, Kim. Anne says, you speak the truth, but wait till you have grandies. Oh, grandchildren. I'm thinking grandies, is that a stock, Anne? Yes, talking about the children having their own opinions, which is always very interesting anyway. All right, folks, any setups on the US that you managed to find this week? I think that were the main ones that came through. What I might do here is just let's have a look at, these are the two stocks for the time being that are in the two ETFs that are in the Elite Funds Maximizer at this point in time. What I might do is I might just put on the US template just to give you a bit of an idea as to what's happening, how this would compare to an entity that we might choose to trade through our Elite Traders Club methodology. They are completely different methodologies, but in terms of, there's certain components of ETC that the methodology that are common to the EFM, the Elite Funds Maximizer strategy. And certainly, the concept of relative strength is one of the attributes that the system looks for, along with momentum, volatility metrics as well. So this particular ETF, QQQ, we are down a little bit on this one. This is a weekly chart. So if we just put this back on a daily chart, at the beginning of the month, first week of that was the Monday, the 3rd of August. That was the day in which we entered the ETF at market. So you'll see we're down a little bit on that for the time being. Certainly nothing to worry about at this point in time, still holding up reasonably well. We've still got, a couple of weeks to go before we run the scan again. So not too concerned about that. Some people have asked, why do we get in at market? Why don't we wait for a break above a relevant peak? Well, you could do that. However, one of the bases of the EFM strategy is that it's about momentum over an extended period of time. So sometimes what you will find is that in the last few periods of the month, part of that momentum that's been measured over a specific look-back period, it might be just easing off a little bit. Now, if you happen to wait to get past the previous peak, then what happens is you miss out on the move from getting in at market back up to the said previous peak. So it's a really good question, and it's one worth addressing as well, because it's a common, because we're so used to trading price action and breakouts and all those sorts of things. It's a question that I think is a fairly obvious one and a fairly legitimate one. So that's QQQ. The other one is XHB. Now again, this is on the daily chart, so looking pretty good at this stage, looking nice and strong. I'll just put our little, if I can put the value line on. No, I'm going to have to put a new one on there. Our value line on from the beginning, which was the 3rd, that day there. And again, first week it was moving in the counter direction, but the last week's moved very, very strongly. A lot of nice white candles in that at the same time as well. So that's actually been performing quite strongly, and the performance of XHB has actually made up for a little bit of their negative performance in QQQ. So the portfolio is up marginally, and when we compare that against our benchmark is the ASX, the All Ords Accumulation Index. Well, you only have to look back to last week's market and see what's happened over the last 2 weeks on our market. Our market's down around 3 or 4% in the last couple of weeks. So portfolio holding up very, very well. And again, it's the sort of thing that is always going to be invested in the market. It's always looking for those ETFs that have been specifically put together to not just have a whole lot of direct correlations, but also quite a number of ETFs that have anti-correlations as well. So particularly when you're looking at things like bonds, in particular inverse VIX, those sorts of things along the way. All right. Any questions, guys? Fairly short sessions today. Good question there from Marie. Is XHB an ASX ETF? No, all the ETFs in the Elite Funds Maximizer, they are all listed on the US exchange. So you'll need a US-based account, or an account that allows you to trade in the US, in which to invest in those. There's not many ETFs listed on the Australian market. There's probably a dozen or so. They're not quite as liquid as the ones in the US, and so obviously liquidity is a major requirement for getting into and out of the market. And so we're needing to have good depth, good liquidity, and those of you who want to know a little bit more about each of the ETFs that are part of the Elite Funds Maximizer, in the Elite Funds Maximizer portal, you'll see a link there that you'll be able to click on and have a look at a PDF of all the ETFs, what the major holdings of those ETFs are, the capitalisation, etc. of those as well. So, but good question. No questions from Kim. Here's hoping for a turnaround and progressive week for the markets. Yep, absolutely. We'll keep our fingers crossed for that. Certainly, I think the markets are due for a bit of a rebound, and again, if they do rebound quickly, then I'm sure those stocks that you're in will move up in the appropriate direction pretty quickly. All right, folks, don't forget this Wednesday there'll be another education session. Haven't decided on the topic yet. If you do have any suggestions for what you'd like covered in it, please shoot me an email. I'm more than happy to cover off on any of the suggestions that you put forward. But until then, that's it for the time being. Good luck with your trading this week. Make sure you're doing the right things in terms of trade management. And if you need any assistance, please don't forget to click on the link on any of the emails that we send you. I think it is important that you be up to speed, and if you're struggling with anything, that's why we're here. Just a reminder, last week's education session that I did do was looking at stocks that have moved up in excess of 100% in the last 2 years. How do you get those stocks into your portfolio? Well, you don't. You never know that they're going to end up like that. You just need to manage your trades using the appropriate methodology and allowing those sorts of trades to unfold. And over a period of time, you look back, and with a little bit of luck, some of your portfolios may well include some of those stocks, and it will make all the difference just through good, appropriate, simplified trade management. All right, folks, that's it for this week. We will catch up with you live again on Wednesday afternoon for the education session, and don't forget at the end of the week on Friday for the combined macroeconomic session that I do with Jeff Saffer, which you should all have had notification about and had some opportunity, hopefully over the course of the weekend, to listen to some of Jeff's expertise comments on the macroeconomic situation. All right, thanks for listening. Bye for now.